Oh, Bill Belichick, oh, how I miss you. I just wanna kiss you. Man, have you ever heard a better song than Chandler Jones' CTE jingle for Bill Belichick? That's right, folks. We're talking about the most anticipated earnings for the week of February 19th, 2024. Get it right, folks. Missed last week. We were on vacation, but we're freaking back, and I hope you're excited. I started you off on the right note. We got a lot of great companies still reporting. Obviously, we had a lot of these big companies already report, and there's still some big ones to come, baby. And I've got a big one to come too, if you know what I'm saying. I wish I didn't say that, but we're gonna keep it rolling. It's not that large. So here's what we're thinking, right? Obviously, Monday, there's nothing really to be had there. Well, it's President's Day. It's gonna be my day. Ladies and gentlemen, it's my day. That's what it is, baby. It's President's Day. So you see a couple companies reporting after hours. Not really much that I would like to talk about. Um, let's be real. So there's three main companies I'm going to be focusing on here today, and I actually have a ton of tabs open for those three companies. Kind of wild, so we're going to go in depth into some of those. Hope you're excited. Let's start. We'll just go through what is reporting Monday. Might be relevant for some of you guys. First off, we got Transocean. No comment. Don't want to say anything that'll get me canceled. Masonite with the ticker DOOR. Now I don't know what Masonite is, but I'm gonna assume that might have something to do with that ticker potentially. Geldwin, what even are you? HealthStream, and then we've got Blackstone Minerals. I don't know. It's boring to me. You know what's not boring? When I get smacked in the face Tuesday morning by Walmart. And you know Walmart, I got a ton of Walmart, okay? Used to work at Walmart. Well, not really Walmart, but Sam's Club, okay? Same company. I got a lot of stock from Walmart, and they give out a lot of stock, let me tell you, to the employees. So there's a lot riding on this, right? I want good earnings. I want good earnings. So let's take a look at what they're expected. Well, they're definitely one of my focus stocks. So first off, we need to know, obviously, when we take a look at this, at what we expect from an earnings, we got to first look at the stock itself. Because there are some stocks, and I say it constantly, that regardless of how good the earnings could be, there's some stocks that might still go down because of those earnings. And those are ones that have just absolutely exploded. The phrasing's not looking great here. It's rough phrasing to start, but the ones that are just nonstop going up for a year, 3 months, up high double digits in 3 months, it's hard for those to keep going up after earnings because expectations are so ridiculously high. They've got to do a lot of good things to make that happen. So, with that said, let's take a look at what the stock's been doing. I'd like to look over the last year, and let me tell you, it's been pretty good. Nothing exceptional, but pretty good. Last year up 16%. Obviously, that's nothing game breaking by any means, and even if you look at a 5-year horizon, up 71% is not really like it's not crazy. It really isn't. So it sets the stage for the fact that there's definitely room to go up, in my opinion. Um, I think there is. So let's take a look at the estimates. How about we do that? Here is what's going on. Expected $1.64 EPS versus $1.71. Really of just a year prior. So it's going to be pretty close. In my opinion, I think it's going to be closer to that year ago line than this. I think it'll beat from that perspective. I've seen a lot of good stuff that would indicate we're going to see a beat here from the company. Just from retail sales data. And I really think, I don't know, cost. I think it's going to be okay for them. I think they're going to beat here. Now for the full year, they are still expected to grow. Punch the microphone. Hope you enjoyed it. $6.48 versus $6.29 of the year prior. Again, I don't think there's a problem here. I think this is certainly achievable. No doubt about it. Now, the revenue is really the main story that I wanted to talk about with Walmart because that's where we see this stock growing. It's not necessarily the EPS as much, right? They're going to be consistent in their earnings. You're never going to see a shocker in the negative for them, in my opinion. Um, Now, the revenue is really what people are going to talk about. You want to know why? This is the holiday quarter. Christmas happened during this quarter. That's big. And we saw from other companies, namely, let's say Amazon, that there was a lot of sales to be done during December. A lot of sales. Now, my question is, was Walmart able to capture part of that? And I really do think they were. Um, what do I like to look for in this earnings? Well, first off, we obviously want to look at the revenue. I'm actually very intrigued to look at Walmart Plus. Um, it's a cheap program, and I'm curious how many people they were able to get onto the program here over this quarter because of the fact that people wanted that free shipping. They wanted the free, drive up, whatever. I can't. What the heck is it called? Anyways, it's pickup where you place the order, they come deliver it to your vehicle. That's what I'm talking about. So I'm curious what kind of movement we saw there. Did we see growth there? Because that's really big for a company like Walmart because it's recurring revenue. If you're a Walmart Plus subscriber, it seems weird to say subscriber, I guess user, I don't know. But anyways, you pay monthly for that service, and that's revenue that they get beyond selling merchandise. That's a whole nother stream of revenue for them. So obviously very big in that aspect. Um, Expected this $170.66 billion line against a year ago of 164. Now that's a massive line. Obviously, it's a 4% growth, and a 4% growth when we're talking about $6 billion, $6.5 billion. That's a lot of money to increase year over year. For some companies, I mean that's bigger than most companies' annual revenue. The vast majority of companies' annual revenue. So that's a big expectation. Now, what did we see Amazon do? We saw Amazon smash that revenue estimate and beat by several billions of dollars. Um, Walmart, not the same company, let's be fair. What do I think here? I would be. Whoa, laptop's magnetized on the side. Didn't realize that. So bread tie. Why do I have a bread tie in here? Where'd that come from? Um, Anyways, ADHD aside, I don't see a world in which this isn't a beat. I'm just going to say it right here, right now. I think this is a beat from Walmart in terms of both EPS and revenue. Retail sales data over this quarter has looked really good. We saw a little slowdown here in January, but this quarter is going to drive the majority of its revenue from none other than December, where we saw massive increases. So, consumer was very strong in December. I like where this is going. What else do we have with Walmart? Well, hey, they just announced a 3-for-1 stock split. Obviously, we're going to go more into that. That's going to drive people into the stock anyways. So in my opinion, it's going to be hard for this stock to necessarily go down too much. You want to know why? Because the people holding this, I don't think they want to sell prior to this 3-for-1 split. That's just my opinion on the matter. So movement, in my opinion, it's going to be pretty minimal. I don't think it's going to be 5+% in either direction. I think it'll be slightly up, though. We're talking about 1 or 2% gain after earnings. That's my opinion. We look at the statistics because it's also a great thing to look at. Trailing PE at 28 and forward PE at 23. That's really in line where this thing's been at historically, right? You look back in 2016, this was a different story of Walmart, trading in a PE of 10, 12. That's a different story for Walmart. And things have transformed, and now you're seeing it trading in a higher PE ratio. My opinion of the matter is Walmart in the mid 20s is a good PE ratio. They're showing good growth. They're showing new revenue or new avenues for growth. I think Walmart in the mid 20s is a great value. I really do. We're talking about a great dividend that's going to be growing over years and years and years. We're talking about a company that's going to be growing over years and years and years and going nowhere. That's my thoughts there. So, hey, that's Walmart for you. On to the next one. It's going to be Home Depot. Slightly similar, but also slightly different of a story. Home Depot, we've seen a very hit or miss quarters with really this and Lowe's, the home improvement companies. Sometimes you see good, sometimes you see bad. Now, we still talk when we talk about Home Depot, we like to look at the housing market, and we've seen yet again another big slowdown. And what does that typically mean, in my opinion? I think that means people with rates continuing to go up, by the way. They didn't go down, just slightly, and then they went right back up. If rates aren't going to be decreasing, which it seems like the Fed might not lower the rates in March as we might have hoped, because inflation is somehow still around, someone can't get it under control, and never will, incompetent, it means people are going to be staying in their own homes. And I think we're seeing that, right? Record lows in terms of new house listings. Um, People aren't listing houses for sale. They don't. Why would you move if you've got a rate of 4% on your mortgage? You don't want a 7 to 7.5 rate. You don't. I would know, because guess who just locked himself into a 7% rate, and I hate it. But anyways, it means people are going to spend more money on their own home and enjoy that while they can. So that's my opinion. This is the time to really vamp up your house. So I think it bodes well for them. I do. I don't really have a great insight on what they're going to do, though. I mean, this stock it's a boring one typically. I'm just being honest. Anyways, moving on, we've got Axum. I mean, I see what they're doing there. It's I don't have much to say about it. Look, it's lame. I see what they're trying to do. It's just kind of lame. Medtronic following them. That's an expensive stock here, folks. Medtronic, and there's no doubt about it. Yeah, I don't have a lot to say about Medtronic, unfortunately. I apologize. I wish I did. Barclays. I really don't have a lot to say about Barclays either. I might want to say stuff about them. But all I really see is, I know the business for the analyst side of it, and obviously that's where they get a majority of the, you know, majority of the revenue here. The analyst wing is all most people know from Barclays, and it's really all I kind of know. I haven't looked too much in the company. I need to. It's one of the big three, baby. LGI Homes, nothing crazy there. Dana, not Dana White. It's a different Dana. Don't know which Dana this is. Not a fan of this Dana, though. Armstrong, Billy Joe, I don't know. They put the circle on the A. They're trying to go for the Avengers look there. I mean, I respect it, but I don't respect it at the same time. KBR and Fluor, that's the worst. That's the worst company name ever, and I hate it. I hate it. Roast me if you know what that is. I don't have a clue what Fluor is, but it's kind of set me off. Think of a better name. After close, we've got Palo Alto. I know a lot of people will be looking at Palo Alto. I forgot I just bought a new microphone. Why didn't I plug it in? Oh no! Next week, you're going to get a crisp, smooth microphone. Palo Alto, a lot of people will be looking at it as a big tech, I guess moderate-sized tech company. As the NASDAQ continues to surge, man, they keep doing it. We'll be looking at Palo Alto and see what they're able to do. Solar Edge, we got Realty Income, the monthly dividend company. I look for them. Tuesday after close, we're going to see the impact of the Spirit Realty acquisition on the earnings, see what that does. Obviously, there's no doubt it's going to increase the revenue by a significant margin, but the question is, what does that do to their FFO and or EPS also? Curious what that looks like for them, because the company was struggling a little bit, Spirit Realty was, and the stock itself has just been performing very poorly. Realty Income has, so we'll see this. I've seen, definitely saw numbers that REITs had a lot of inflow in January, so it should be beneficial for them in that sense, but hey, we'll see. Teladoc Health, yeah, I don't have a lot to say. I've never utilized the service. I don't know if anyone here has. If they have, tell me how it is. Innovix. We've got Caesars Entertainment. Definitely something to look at because, one thing I wanted to note here is last week there was DraftKings reported. Yes, they did last week. I remember seeing that. So DraftKings reported. And I'm trying to remember what those earnings looked like. But anyways, it was not great. I know that they had definitely a big loss. Let me see if I can find it real quick. In terms of EPS was a loss. Now, Improving from a loss. Let's see. Just earning of 29 cents. Okay, okay, okay. Revenue growth, hey, slowed for the second quarter, but it increased 43% to 1.23 billion. And again, look, this company, I mean, these, especially with Caesars too, the money they're making here is from obviously gambling, sports betting. This quarter won't contain the Super Bowl, so obviously that's going to be important. I haven't quite seen early numbers on what the Super Bowl betting looks like, but again, we're not even going to see it. They might announce it in the earnings, kind of what that looked like. That's definitely possible. But I don't know. Sports betting is its own beast, and it'll be around forever. Just not every state's involved, and once some of those big ones get in, man, it could be really big for these companies. But kind of a stalemate for the time being. Diamondback Energy, Neogenomics, Toll Brothers. They have a lot of fancy houses, no doubt, which is going to be impacted, right? Obviously, it benefits them a little more because the rich people don't necessarily care about rates. Some people will buy these things in cash, but I don't know. Not a lot to say with Toll Brothers there. And then we've got MetaFast. Better than MetaSlow, I'll tell you that right now. Dog, I don't need to pet you right now. I got stuff to do, but I will pet you because you're making me. We've got Wednesday before open, we've got Vertiv. We've got, what the heck are you? Medical Properties Trust. You've been licking these paws. Why are they wet, dog? What are you doing? Analog Devices, a chip maker. We've seen a lot of great earnings from chip makers already. I would honestly think, we saw Qualcomm, we saw AMD. I think ADI would put up a similar number there. Analog Devices, a similar beat. That's what I'm excited to see for sure. Don't hold the stock anymore, but I historically did. We have Wingstop following them. Kind of weird that Wingstop by itself is a publicly traded company. Normally you see these restaurant chains, they're owned by somebody like, Yum Brands or something like that. They don't really trade by themselves, especially like Wingstop. I don't feel like they're like that major of a player in the game, but hey, who knows? Decent chicken. Uh, no, I'm trying. No, that was Popeyes that just announced they had wings. Sorry, it wasn't Wingstop. I don't know. It's a weird company to invest in my opinion. I don't know where the growth is with that. I mean, it's Wingstop. I don't know. We got Wix. We've got Photronics. Then we've got Global E. Make the comment every time. Not gonna make it this time. Not gonna make a joke on it. Exelon. Terrible name of a company yet again. Alight. Come on now, guys. Can we think of something good for once? And then HSBC. Now that's a name, folks. A light. Get out of here. After close, we've got to focus stock. Obviously, it is because it's freaking Nvidia. And why is it? Because this is a stock that's up 240% in the past year. I said that right. 240%. Absolutely nutty what this stock has been able to do, and some of us have been able to enjoy the ride up, let me tell you. I've been enjoying it. Now, here's one of those where you get into one of those situations where you say, how does this stock go up after earnings? It's going to be tough. They have astronomical expectations here for this report. If they don't beat significantly, the stock's still going to go down. I could say 100%, I think if they beat on EPS, revenue, and outlook, I think if they beat on all three of those, but they're not massive beats, I think the stock still goes down. I just want to say that. And that's because of the fact that there's been such a run up in this last quarter alone. We look over really since last earnings. I mean, 38% in the span of 3 months is incredible. That's an insane report. It's an insane growth. I mean, how do you do that in 3 months? I don't know. They did though. So, what are they expected? Well, let's take a look at that. Here's the big story of growth with this company. There's no doubt. I mean, it's something that lacked the profitability here a couple of years back, and now we're seeing that profit story really rein in. Here they're expected 456 against a year ago's 88 cents. EPS now for a full year 1236 against 334. Now that's what's massive for them. Obviously, when you see the stock grow by such a massive amount, you need the EPS to grow by a pretty equal percentage too. And you want to know why? Because we get into valuation talks at some point. Now, I think Nvidia is a company that's really skirted valuation talks, and it has for a long time. And it's because of the hyper growth. And what do I mean by hyper growth? Well, you look at this, 20.38 billion expected. That's against 6 billion of last year, 236% growth in terms of revenue. I see revenue growth like that, and that's a company where people don't really care about the valuation. And we'll look at that too. We do look at the valuation regardless. On the full year, expected to grow 119%, doubling the sales. When we're talking about 50 plus billion dollars, to double that is, it's absolute, to double the revenue from there is absolutely insane growth. It's absolutely insane. And from what I'm seeing, it's a company that doesn't really show signs of slowing down. And I say that because it's in a space, chip manufacturing, that is only going to get bigger with the increase of artificial intelligence. Nvidia is the main player in the game. Um, and gaming, I mean, they're in the most hot industries that they could be in. And that's massive for them. And that's why people forget about valuation. But hey, let's go ahead and look at valuation regardless, because you know I like to. It's a company, obviously a massive market cap, 1.8 trillion. When we're talking about a company with $20 billion of sales in a year, it's insane. Or 59 billion. It's an insane valuation. There's no doubt about it. A price to sales of 40. Good grief. But here's where we can start to make an argument that there is actually value left in Nvidia. A lot of people don't want to say there is. A trailing PE of 95. Now, I look historically, and it's pretty high, right? This company historically has not traded at a PE ratio that high almost ever. But here's where we want to talk about something else. It's the forward PE. And that's because this forward expected earnings for Nvidia is incredibly high. The dog sneeze, not me. If they're able to maintain this guidance and potentially boost it, we're talking about a PE ratio at a forward PE, I should say, of 35. Historically, one of the lower that we've seen. If this company was trading at a PE ratio of 35, that's lower than it's traded in a long time, right? We're talking back to 2016. It traded down there briefly in 2018, right? But since then, it's been 50 plus consistently for 3 years now. A little over 3 years. So if that's a possibility that they have a fantastic report and continue to show the same guidance or not, or if not grow the guidance potentially, there is still a value. It's crazy for me to say. You know me, and I talk valuation a lot. It's hard for me to say this, but there's still a value play in Nvidia. There is. The stock's just gone up so much, but the earnings they're generating are massive, and that's what we need to see for this quarter. The only way they go up, though, I'm telling you right now, is a triple beat, the trifecta: EPS, revenue, and outlook guidance. It's the only way they do it, and they have to beat them by a good margin. That's the only way the stock goes up after this. Now, let's look at following them. It's actually another stock I wanted to focus on is Rivian. And why? You don't see me talk about Rivian much in these EVs, but I'm going to bring them up. And it's because it's a stock that's been, I'll be honest, pretty trash. I look at a year for Rivian, down 19%. Broader markets outperformed it by a ridiculous amount. I look really since inception, down 87%. This stock is at nearly the lowest it's ever been. And that's because sentiment is pretty ugly on it right now, right? But let's see what we can talk about here in terms of earnings, right? What are they expected? Because we know for a fact it's not a profitable company. It's brand new. It's not going to be profitable. But what can we see? Well, I see this, and I see an EPS estimate here of negative $1.32. We knew it's going to be negative. That compares to $1.73 of a year prior. Now, put that in actual numbers there. We're seeing about a 25, about a 25 to 30% increase there if they hit the line, right? So that's obviously showing growth, right? That's good to see from that perspective. Negative $4.96 for the full year. It's ugly to look at. I hate looking at that. A year ago was a 634 though. So again, we're talking about that being about a 25% growth. Even though it's still a loss, but you're seeing the movement in the right direction. Now, revenue is the story for Nvidia, right? That's what they're going to be what am I talking about? For Rivian. Average estimate for revenue, $1.26 billion. Obviously not a crazy massive line, but again, that compares to 663 of a year ago, 663 million. That's a 90% growth. Nearly triple-digit growth. For the full year, they're expected triple-digit growth. 163 against 437. What am I talking? 166 against this estimate of 437 billion, 4.37. Pretty massive growth there, 163%. So that is where the story of the stock is. It's going to be in growth. But what people need to realize is we know this is not a company that's going to be, really having, let's say, earnings positive in a while, right? We look at Tesla's origin. It took them a long time before they actually made profit, and they finally are after about 4-5 years of being publicly traded. In big time and actually delivering vehicles. We're talking about 4 to 5 years before they actually made profit. Now, Rivian's only 1.5, 2 years into this. Ford, they've been doing EVs for a couple years. They're still losing a lot of money. 4.5 billion expected to lose on electric vehicles for the full year of 2023. $4.5 billion. So even Ford isn't making money on it. Rivian, brand new company with only a couple models here. They're also losing a lot of money. But what people would be in the stock for is this growth story. We're talking about from 2021, obviously 2022, doubled it, doubled it, doubled it. We're talking about doubling the revenue. That's what people are in this for, right? And I mentioned Tesla. I'll bring this up too. Again, we want to talk about with Rivian. Why would you buy it? It's the potential for growth here yet again. And we see the growth from Tesla in increase in deliveries, right? I just wanted to show this line here. Total deliveries for them, pretty massive. 1.8 million vehicles delivered. Now, that's a 38% growth in delivery. Obviously really good, really good. And they're a company that produces a lot of vehicles. Now, Rivian doesn't nearly produce and deliver as many vehicles as Tesla. But does that mean they've got the same growth story? Could they get there? It's possible for sure. Rivian's got investments from a lot of big companies that want them to succeed. EVs undoubtedly are only going to get bigger. I do think, and a lot of people don't want to agree with this, there's going to be a bit of a slump in EVs over the next couple of years. I think the networks haven't expanded as quickly as they need to be. I think they're not quite affordable yet. There's no doubt that they're not affordable. And they're just a little inconvenient. Good grief. And we're talking about tax credits being taken away where they used to exist. So there's positives and negatives here. No doubt. But when I look at Rivian and the fact that this is a stock actually, trading in a market cap of 15 billion. Now, off of an annual revenue of about 5 billion, a price to sales of 3, in my opinion, if you were going to get into this stock, I think now's the time. You're not going to see, if it's able to continue the growth rates that we're seeing, right? Double digit, high double digit, nearly triple digit annually, if they're able to continue that in the future, well, then we're talking about a company, the price to sales of 3 is criminally low. It really is. It's not a company we're going to talk about EPS on because, again, it's too new for that. It's just too new to be making positive earnings. If you wanted a speculative play in the EV space, Tesla obviously super volatile. It's hard to get into it right now. You just never know where it's going to go on a day-by-day basis. And obviously there's the controversy with Elon Musk. He always brings stuff up, and then his tweet could impact the stock price, right? If you don't want that drama, Rivian could be your play. Am I in Rivian? I'm not right now. Does taking a look and actually analyzing the stock make me a little more interested? I think it does. I think it does. And I think this earnings is going to tell me a lot about what this company's got in store. Would I buy it prior to earnings? I don't know. I don't know if I would. I might. I'll just tell you that right now. I want to say this man to man, mano y mano. I think this is a stock that, if you're going to buy it, it's going to be one you're going to have brass ones, an absolute set of brass ones. Okay, you're going to have to hold this for years and hope that it does what Tesla did. That's what you got to do. We're not going to see profit for 2 to 3 years for Rivian. I'm just going to tell you that right now, if they get there. If they get there. But hey, that's exploding my voice. That's Rivian. Let's move on. We've got Etsy following them. Again, we're talking about sales from an electronic shopping standpoint, shopping online, as some might say. And they've done well. So let's see what Etsy can pull off. Synopsis: we've got Lucid, another one of those automotive EV makers. EV makers. One of the big ones for sure. I think there's so many in the game. It's crazy. There's so many freaking automotive companies. But hey, obviously you're going to look at Lucid and you're going to look at Rivian the same day and see what's going on there. A lot of people into Lucid as well as their speculative play for EVs. Sonova after them. We've got the Dutch Bros. Yeah, that's right. They're brothers. APA Corporation. Marathon Oil. Big Earl right there. Big oil. Price is going up, so it could be good for them. Suncor Energy. And then finally Thursday, not finally because there's also Friday, but Thursday before open we've got Moderna. Hopefully you've gotten your 98th booster. Pfizer sure hopes you did. Nope, they've been throwing away all the boosters. Sorry, because nobody wanted them. We got Newmont. We've got Nikola. I don't understand how this company is publicly trading still. It's a fake company that they've lied, they've cheated. CEO got prison time. But hey, here they still are. I don't even want to talk about them. They set me off. People freaking fell for that. I never did, folks. I never did. You put an empty vehicle, an empty truck on a downhill slope and try to fool people into thinking you've got a working engine when you don't even have a working engine? What a joke. How's the company allowed to survive? Chenier? Nah, that's the worst name ever. Fiverr? I don't understand why people use Fiverr. I got to be honest with you. But to each their own. Wayfair? Similar in Etsy. I've never been on Wayfair, but they got what you need is what I've heard. I've never once used Wayfair. I just don't know if it's good or if it's bad. To me, it seems like one of those dated platforms where the website's just not all that great. Pioneer, Natural Resources. We've got Eagle Point. Oh, baby. We got First Majestic. I mean, we're talking about equations here or something. Why is this F that way? Is this force equals mass times acceleration? F equals ma? Maybe. I don't know what's going on here with this F function. I mean, what are we doing? We doing calculus here? Looks like we might be doing calculus. I don't know. I don't want to do it though. I don't want to do it anymore. I already took that class. Got a B in college, man. I'm an idiot, aren't I? I'm a freaking idiot. Only B in all of college. Can you believe that? Only B. Only B. Wait, no, I got one. Never mind. I don't want to talk about that other one. No, I'm talking about it. I gotta be in art history. This scumbag knows this is a class that's a joke. And the professor took it so seriously. It's the most homework I've had in any class was art history. I can't believe it. This scumbag gave us homework every freaking day. And you know what happened? He said he thought people were cheating. He invalidated every single bit of homework that we did. Every class period, we had a piece of homework. He invalidated all of it and judged the entire grade on 4 tests in art history. Are you a piece of crap? Yes, you are. Yes, you freaking are. I don't care about Vincent van Gogh. I don't care about any of them. Screw you. I mean, I've lost where I was. I was so upset. Builder's First Source. Then after close, we've got Block, otherwise formerly known as Square, I guess. Good for them. Carvana, don't like them. The car vending machine, I just don't like them. Don't want to talk about them. They lose a lot of money. Don't really get the future of the business. I don't see what they're doing. Mercado Libre, it's a free market, baby. That's Spanish. That's your Spanish lesson for the day. I didn't learn that in college. I learned that in high school. I still can speak it. You freaking... I'm not going to say that word. That Spanish word is a bad word. New. Ardalix. I mean, come on with these names. You suck. Booking Holdings. Booking.yeah. Booking.com. I don't know who uses them. Intuit. TurboTax. We're not quite in tax season, but hey, people might have bought some tax software for Christmas maybe. That'd be the worst Christmas present ever. Here, have the government come bend you over some more. Indy. Vail. And then Live Nation. Then, how is that a company that's publicly traded? Live Nation? Get out of here. Friday, we've got Warner Brothers Discovery. I don't know what you can say about Warner Brothers Discovery. Just boring, man. Just boring. How does this company, merge with Discovery? I don't know. It's just like, They got they're just weird, man. That's all I got to say. Bloomin' Brands, they produce the Bloomin' Onion first. We've got the MVP Lamar Jackson, not a deserving MVP. He's not the MVP we deserved, but he's the MVP a lot of people wanted, I think. A lot of quarterbacks better than him, though. Let's just be fair. A lot better statistics out there than Lamar Jackson. A lot more important to the team than Lamar Jackson. NW Natural, Diana Shipping, okay. Uh, Docebo, what are you? I don't know. AirCap. I mean, these are the dumbest companies ever. It's kind of set me off. Sunstone Gray and then Frontier Communications. I'm done with this. Get me out of here. Peace.